So if you followed along to my previous post for Usdjpy, I think I posted this 2 or 3 days ago. So this is the setup that was posted. If you want to verify that, I just didn't put this in now, you can go back to my channel. It'll be like the second last idea, I believe. So this is one of the nicer setups that I've seen. I haven't really traded Usdjpy in a while. I just kind of got tired of looking at US30 and I want to see if my my rules would follow and translate to other pairs, which it does. This is a pretty clean setup. The main reason for taking this trade was on the daily. I was mainly looking to see if market structure had changed. So from here, we've seen price find the top, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Same thing, lower low, lower high, lower low, lower high. Here's where we see the change of structure. We see a higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then we see price come down. We see a lower low being formed, a lower high, a lower low being formed again. Now the reason to go long here was because of the floor price here. We see plenty of rejections at that level here on the top and the bottom side. So for me, this is a well-respected level. As I've said, you can go based off 1 or 2 touches. I usually go for 3 on either side to make sure it's valid. So for me, this was a good indication that price would likely reject here and form a bottom at that floor, and then look to form a lower high point. So for me to get out, I would close ultimately 75% of my positions at this level here, just because there is a bit of resistance of where price does tend to reject on either side. So for me, my entry point was at the floor. We put stops just below the wicks just in case price to try and grab liquidity, which it does happen quite a bit. You'll see liquidity grabs happen mostly on higher volatile pairs like US30 or gold. Even Bitcoin does it a lot, where you see whenever there's a market open, you'll see price usually tank in either direction just to start the session open to take out prior orders from previous sessions. It happens a lot actually if you watch market open candles. Anyway, so right now we looked for the long. That was the main bias behind that entry. And as you can see, there was really no drawdown from the entry point. So this was the entry for us when we found the rejection at that floor level here. So for me, I opened a long, a comfortable position, not too big of a stop if you had to get stopped out here. But again, barely any drawdown. I think we only would have risked, how many pips is that? You only would have been a drawdown at about 43 pips, which isn't that big of a deal, especially if you're managing your risk well and you're not over leveraging. So even now, 4 hour, I'd feel comfortable holding this up until this point here, just because you have had clean breaks and not really any major pullbacks except for here, where you've had that level retrace quite a bit. But then again, you found a bottom at the at the current floor for that zone. And then you've seen, the 4 hour currently taken off. There is quite a bit of news coming up. I haven't really looked into what's happening, but there is quite a few bubbles down here of what's to come for the end of the month. Another thing you gotta be wary of is that as you approach the end of quarters, markets do tend to get a bit choppy. But if you're in the green like you are here, it's not really, too much of a big deal to let these trades run. I'm likely just going to put my stops at my TPs at this point. That's what these zones are here. I had TP1 at this level just because it was a ceiling price for me here, because you had rejections on this side, here, 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 and here. So for me, that was TP1. Once that gets hit, I always put my stops at break even. Then once we get TP2 hit, I push my stops at TP1, just in case prices retrace all the way back down to our entry point. We don't get caught with nothing. We end up, with closing profit for both positions. And then TP3, we're going to look for here. Price does come up here and reject somewhat. We're going to put stops at TP2 just because this is the current floor that we would see price come back down to before a move back to the downside. But yeah, if you did follow this setup, good for you. I don't really trade this pair as much, but I think I'm going to get back into the other cross pairs just because they're less volatile. And what I've seen so far is that market structure does really play nicer on these kind of pairs and setups, just because you don't have too much, unexpected news or market sentiment that pushes you in the opposite direction of what your TA is showing you. But yeah, so feel free to close out if you are in this. I'm going to hold until 134 TAC 3 at the very least, and then we'll see what the new month opens up as. You can look at the monthly right now. Previous month, pretty bullish. Clean rejection at the floor here. We've had price come up to this floor, come back down. So you could expect this month to close. At the very least, I'd want to see price hold above here. And if you can, it would be nice if price closed back above these levels here for a continuation of this bullish leg. If you really want to grasp at thin air, you could say this is going to form something like that, but that always doesn't happen, especially not in the monthly time frames. They don't really play out those nice little patterns as easy as the lower time frames do. But yeah, let's see what happens. Even the weekly, floor found. This is a safe level to see on the weekly as well, just because you do have quite a bit of rejection there, as you can see here. See, I think if we do reject here, I probably will just close out and then wait for another setup on this pair. But yeah, we'll see what happens.